Is Robinhood a cyclical company? And if 2025 ends up being not the best market in terms of bullishness, could Robinhood take a hit pretty badly? Let's start off with you, Roy. What are your thoughts on that?
Yeah, I mean, it's still very cyclical. It's less so than it was before. A lot of that is that they have their retirement accounts, which are not going to just dry up and disappear in a bear market. Like it, assets under custody certainly will, but yeah, they do say that they're less cyclical, and they are, but maybe not quite as much as they're saying. They noted in the slide deck, I was looking for it real quick, that there is now 9 products that have a $100 million run rate or more, but all but like 1 or 2 are tied to equity bull market and crypto bull market. If we have another crypto winter, and it's a win, and when we have another bear market, Robinhood they'll be around. They'll be fine. They're a lot healthier than they were before, but they will contract, and the stock will go down as a result, probably. But they are very. It's a much better long term thesis, I think, now than when I was first entering May 2023. A lot has changed to the positive, but it's cyclical. That cyclical, by the way, doesn't mean bad. A lot of people have that perspective. It's like, hey, I'll ride it in this cycle, then I'll get out the next cycle. I mean, like even Tesla is cyclical, and if you have a very high quality cyclical company, the best thing to do is you ride the cycles, maybe trim a little bit in a bull market, maybe add a lot in a bear market. But if it's a quality company, an industry leader, I think you just hold those.
Roy, or not Roy, Tanner, thoughts on cyclicality?
I mean, they are like they're a trading business, right? So obviously, they'll go down if the market goes down. But the good thing is that they're diversifying into different products. So event contracts are going to bring that next level where you might even bring in a completely different audience that is not looking to necessarily invest, but maybe just simply gamble. And that's okay. DraftKings exists, Robinhood exists. Let adults do what they want to do with their own money. But whether it is crypto or equities, potentially bonds in the future, or event contracts, the ability to diversify is what they need to focus on. And whether that is even between transactional revenue or net interest income is also what they need to focus on. So net interest revenue is going to be a large bulk of the shift as well. But if markets come down and there's not an adjustment in rates as well, then they are going to get hurt, But it's not looking like that because Trump's looking pretty good right now. So it might be a lot of positivity for Robinhood, and we're already seeing that. So
yeah, the SEC change is so big.
Yeah, and take a look at this slide that Roy has here on the screen. So this is really interesting. First of all, my thoughts on cyclicality. Yes, it is pretty cyclical. I mean, if the market tanks, Robinhood's revenues in terms of trading volumes are going to tank, and that's something that is a risk. I do think that's a massive buy the dip, but that is something that could happen. But these are their 8 or 9 business lines of $100 million of annualized revenue. So you have equity trading, options trading, crypto trading. That's always been there. Margin interest, margin-based securities lending. That's kind of always been there. Cash sweep, that happened in a high interest rate environment. Gold subscriptions, we'll talk about Gold Monday in a second. That is turned into a $100 million ARR business. Fully paid securities lending. And then look at that last one. I think this speaks the diversity of their business. Instant withdrawals. On Q2, I think they made like 25 million bucks on instant withdrawals, meaning like if you want your money right now, you can pay like 75 cents or whatever to get it quicker. That's a big business apparently. And now it's doing $100 million of revenue a year. And I'm like, okay, so they are finding as many new verticals as they can to make this less cyclical. And the fact that they're making 100 million off people instantly withdrawing their money, which, I mean, if people want their money right now, they're going to, pay a little bit more to get it. Boom. That's another business vertical that can print money for them.
So I'll take the first bear case of the show. I mean, that deserves another bell, eh?
We'll kick you after this, by the way.
Sorry?
We'll kick you after this, by the way.
I'm fine with that. So there's a ton of money in instant withdrawals. So much. It's crazy how often this ends up happening, and not from affluent users. This is always from lower class or under earners, whatever you want to call it.
So you're saying lower class people will pay the fee to get their money quicker?
Yeah.
What's the psychology behind that, if you know?
It's early wage access. They're using it to pay bills.
Okay. Go ahead.
So there's a couple things here. One, it can be looked at from a regulatory standpoint as a loan. So although it's a flat fee for early wage access, essentially you're getting a 2 to 3 day loan for a fee, which means if you were to look at it from an interest rate on an annualized interest rate over a 3-day period loan, they're insanely high APRs. Now, this is being looked at right now and scrutinized a ton because companies are doing early wage access, and now this might not be around forever. So make the money while the money is good.
But is this early wage access? It's your money. You just want to.
Yeah. So essentially, it's whether or not it falls under that. So,
okay, gotcha.
like, yes, it's whether or not you're going to consider it early wage access or not. So,
as far as that though, like the workaround is, I don't think it is, but like regulators may decide that it is. The issue really comes down to settlement times because it doesn't instantly settle. But you know what it does? And they talked about it a good bit here. And they also mentioned their own, like within this last month, stable coins. Stable coins absolutely can. Now, how can they settle in the bank? That would depend on the bank itself. There's more to be built out. But since there's so much money here, basically, if there's money to be made and regulation comes and says, hey, you can't do this anymore, then that money figures out a way around that. And so that's going to be through stable coins. And so I think that they're one step ahead. There may be some head ones at some point, but I think long-term, this isn't going to go away.
It's just whether or not you can charge money for that, because eventually it's going to get so popular where every financial institution is going to do that. And then you'll be the one that's charging for it when everyone else isn't. And then it won't be competitive.
Yeah, we'll see.
Yeah, absolutely.
It's a small bit of their revenue. I mean, it's added up to a lot. Impressive.
But this is how this is how they make the majority of their money at revenue or Venmo and Cash App. Like these are massive fees that they end up charging. That's like how Cash App makes their money is instant withdrawal.
I was going to ask because you know Cash App really well. So essentially, people need their money, and instead of waiting a day to get it, they want it in 20 minutes, right?
Yeah.
And so they pay that 1% fee to get it.
And guess how many times that they pull that out per year?
How many?
Like close to 50 times. Like it's like almost every single paycheck they get in a like a constant thing of removing it early, which is not even making it early anymore because you're just used to pulling out your money at that time.
So why would people even put their money into Cash App if they know they're going to have to take it out so quickly?
Well, I mean, you're paying you're paying your friends that way. It's just it is your mobile wallet.
Right.
So if potentially Robinhood is looked at that way, or they could be potentially charging 0.75% on withdrawal here. It's a good moneymaker, as you can see how fast they can make a ton of money. This might bring in hundreds of millions of dollars. But I also imagine that and Trump, talk about deregulation, he is deregulating a lot, or at least suspected to. But in the financial services industry, it doesn't seem that way. He's been pretty harsh critic of these types of products and credit cards and all of these things, where it looks like regulation might go up in some of these areas.
Yeah, I just remember I texted Roy after Q2 and I was like, did they make like $20 million off just like I was like, what is that? Like, where did this come from? But it seems like it has definitely turned into a big business.
Yeah, that took me by surprise too. And I remember Tanner talking about this exact thing with Cash App, and it didn't click in my mind. So that's why I'm glad I have you guys.